In order to succeed, you must fail in order to know what not to do next time. Anthony D'Angelo. My friends, every day, 10 to 15 minutes, that is all we ask. Practice trading until you get this down and enjoying it, making the most out of it. It is exciting. And when you master the charts, you will make up for every single second you spent studying this. If you stick with it, if you give up, you've wasted your time. So however long it takes, stick with it. You can do this. Look, think about it. All we're doing is using historical evidence to help us chart where any stock or ETF that is trackable is going to go in the future. And what direction does it go? Up or down? That's a binary decision. Not too hard, is it? Well, it can be. And again, that's why it needs practice. But you can do it because in the end, up or down, that's what we're looking for. You can get good at this. You just got to practice. Let's jump into these charts. Stocks are mixed. Bonds and gold are up. Bitcoin is down. Let's start first with the S&P 500. We have a green up candle. Candles are getting smaller, not reaching a higher high to date. The high we saw was back on the week ending the 5th. Now again, we're awfully close. It was 470.65. Last week, 470.23. This week, 470.48. So again, we see that price percent oscillator is still positive above the red signal line. Derivative oscillator gaining upward momentum. Check out the 2-day. We've got a sideways slide going on here. And again, that Monday, Tuesday candle was a green open box. We have a red open box candle forming right now. First day of the latest 2-day candle. That is a open box red, which means a slowdown in the up movement. Price percent oscillator is flat. Derivative oscillator positive, losing upward momentum. And look at the half day. We can see where things popped up nicely on Tuesday and then rolling over on Wednesday. We still haven't had a crossover. So again, we'll keep our eye on things, see how this continues to progress. What about the Qs? It was up. Now the S&P was down 0.24, the Qs up 0.05, so not a lot of action. And we look at the Qs, of course, the prior $400.99, $399.62 last week, and this week $399.72. So again, slowing down like we see, but still above the trend line for the weekly chart, and the price percent oscillator is pulling away from the red signal line, and it is more than flat. It is heading up. Unlike the S&P, here the Qs, we see it moving again. The Qs, for those of you who are new, NASDAQ 100. We see the derivative oscillator gaining upward momentum. Go to the 2-day, and again, moving up. It had been still sliding sideways, but gaining a little bit upward momentum. Price percent oscillator, a little more than flat. Derivative oscillator, positive, losing momentum. Look at this half day, still hasn't crossed over. See where things popped up in the afternoon and then losing a little bit. Popped up in the morning and then losing a little bit of its steam in the afternoon. So that's where we are on the Qs. Again, pay close attention on these stock charts, particularly to the weekly is the most important, but sort of the forerunner is where is that 2-day that can always pull us out of things. And of course, the intraday, that is the half day, just shows us what's going on during the course of the day. It's the one chart we put the least amount of decision making on. That's the 2-day and the weekly where we really focus. So again, the intraday chart just gives us a feel for what's going on those, twice a day during the course of the day. We never want to check the charts more than a couple of times a day. I typically look at them after idiot hours over around 10:30, 11, and then I check again mid-afternoon or so when I am in a trade. Okay. Oh, and I'll tell you one thing, mistake I made. I jumped into one of our weekly vertical crossovers on Whirlpool, put in a 2%, well, I didn't put in my 2% up and out. And guess who missed the 2% up and out? I did, because I violated my own rule. I got in a rush on Friday. I decided to pull the trigger on that. I did it literally with like 30 seconds to spare before the market closed. It banged up yesterday to my 2% up and out mark. And guess who didn't get the trade because he didn't put in his sell order at 2% up and out right after I put in my buy order and it was taken? Dummy me. I violated my own rule and I didn't catch it. And again, it's what we say over and over and over again. The minute you jump into a trade, you already know where you want to go on your profit and you put in your good till canceled limited sell order. Well, got a great training for you today. It's called Have a Plan Before Pulling the Trigger, and it's all about that kind of stuff. It is in your show notes if you're a subscriber. If you're not a subscriber, subscribe. It doesn't cost anything. It's free. Do it. Get those trainings every day, and when you learn stuff, remember it. Well, it wasn't that I didn't remember, it's that I got so damn busy, it didn't hit me till yesterday that I hadn't put in my sell order. And I'm like, daggone it, how could I do this? We all can do stupid things sometimes. It's not cost me anything yet, still above what I paid for it, but I'd already had my 2% up and out, money in the bank, and dummy me didn't follow my own rule. And again, that's what can happen when you get rushed. So anyway, I'll forgive myself and move on. Okay, and hopefully it'll again, if it hits my loss meter, I'm out anyway, but it's still positive. So we'll watch and see how it does. Okay, guys, learn from my mistakes and from all I've learned. That's what it is all about. Now, let's jump into these charts. Continue to do so. Look at 20-year bonds up for the day, 0.79%. We start always on that weekly chart, red down candle for the week. Price percent oscillator trying to pull away from the red signal line on a weekly vertical crossover going down. Again, don't know if that's going to happen by the end of the week. It looks like the derivative oscillator has virtually disappeared. Look at the 2-day. Again, 5 days of down movement as far as the Heikin Ashi candlestick is showing us. Price percent oscillator positive, but heading down. Derivative oscillator positive, losing momentum. Go to the half day. We can see where things were down in the morning and tried to recover some in the afternoon. Green spinning top at the end of the day, pushing above that half-day trend line, which is nice to see. Price percent oscillators flat, negative. Derivative oscillator losing downward momentum. So keep your eye on things. We'll see if indeed there is a weekly vertical crossover going down at the end of the week, or lo and behold, what happens if it pulls back away from the red signal line going up. That'll be interesting. We'll see how it goes. Okay, let's move on to gold, up 0.91% for the day. That is nice. We've still not hit the high from last week at $174.67. So far this week, $174.60. So only 7 cents off. That's not too bad. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. Gold's looking all right there on the weekly. On the 2-day, trying to recover after the Monday, Tuesday red open box candle, a green candle forming. Price percent oscillator gaining a little bit of an angle up. Derivative oscillator a little more than flat, maybe just a little bit more. At least it's not losing. And look at the half day after that day of down movement on Tuesday. It's nice to see things rebounding on Wednesday, but not enough to cross over on that half-day chart. Derivative oscillator still heading down. Price percent oscillator is negative and about flat. So we'll keep our eye on the prize. Gold is still looking good. Now let's go to Bitcoin, down 1.85%. We almost have a doji for the week. It's very, very close to that. Means lots of indecision, tending down. Price percent oscillator less than flat. Derivative oscillator green, but losing momentum. Look at this 2-day. 3 days of strong down movement we see as far as the Heikin Ashi candlesticks go. Price percent oscillator pulling away from the red signal line. Derivative oscillator heading down. And of course, we talked about that 2-day crossover going down, pulling us out. And of course, if you would have gotten rid of your position there, you wouldn't have taken this day's amount of losses. And again, people ask me, how do you use this Bitcoin chart? I primarily use it for buying decisions. You can use it for selling decisions too, But when you're looking at a time to buy, do you want to buy when Bitcoin is just rocketing up like it had been over these last few weeks? Well, the problem is if you're not buying at a flexion point, like where you have a weekly vertical crossover going up or a 2-day recross, you're asking to have happen what would have happened to someone who jumped in at $67,000 to $68,000 back on, around the 10th of November. What did you do to yourself? Well, you allowed yourself to pay a whole lot more for Bitcoin than you would have otherwise had to if you just would have waited for it to drop down to the $60,000, the $59,000 mark. So again, what helps? Following Bitcoin and charting it, the same if you're interested in Ethereum, is using the things that we teach as we go through these charts so that you're able to see exactly what's going on and learn by doing, by practice trading. It's worth doing that. It's worth your time because, again, once you get good at this and can use all the knowledge you've gained, practice trading with us, training with us, reading books, training with other people, I encourage you to get all the knowledge you can, practice all you can, get as good as you can, practice trading, then doing a little fractional trading. I'll put the fractional trading training at the end of today's video for those who don't know what that is, so that you're practicing with just a little bit of real money, not putting $60,000, $100,000, or $10,000 at risk, or $1,000. But you're putting a small amount, seeing if you can really do this, because sometimes you can fool yourself with paper trading and you can just look the other way and not pay as close attention as you otherwise should have. That is why I encourage folks to document. When you think you're getting good with your paper trading, go over to fractional trading, see how good you are, prove it to yourself. Take as long as it takes, because once you start trading real money and you start doing dummy beginner mistakes and you start getting hammered in the market, you won't be around for long. It just won't happen long term. So we see 3 days of strong down movement in Bitcoin on that 2-day chart, derivative oscillator, price percent oscillator spiking down. We look at this half-day chart, and again, we see things just rocketing down there. We had 2 days of strong down movement, slid sideways back there on Monday the 15th, and then, of course, Tuesday and Wednesday, 16 and 17, hammering down again. That's where we are in these charts. God bless you all, my friends. We appreciate you being with us. You want to know more about what we do? Subscribe for free at the website. If you appreciate what we do and want to support us, go to Patreon. We got all sorts of great goodies for you there. Guess what we'll be putting out tomorrow afternoon? You guys know it will be 20 weekly vertical crossovers. We give those to you every week on the S&P 500 to our Patreon supporters. 3 levels there. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.